The gold bulls have had a tremendous run with current prices at more than one-year highs, and there's been a near 25% uplift from the December lows. But has gold gone as far as it can, given the current circumstances? Well, John Butler joins us now from GoldMoney. John, welcome.
Thank you, Jeremy.
We've spoken to you before. I know you're bullish on the price of gold.
Yes. Before
Before we take a look at what's going on, I do want to take a look at the chart just so we can remind ourselves as to where we've come from and how things have moved up. You've asked me to draw this trend line on here. The lows we had was that 1st of December print there. That's the 25% gain that we've had. You've highlighted this run up here. Before we take a look at the chart from a technical point of view, just remind me why you're a gold bull.
Well, gold is an alternative money. It's a form of insurance against the value of financial assets declining to a degree that stimulates the central bank into injecting more money into the system, which longer term will devalue the purchasing power of that money. And so when you get into a situation like we are today, where clearly we're late in the cycle, growth is coming off, all of the stimulus that has been thrown at the global economy has kind of done what it's going to do. And to grow from here, well, you might need more stimulus. And so you've got this fundamental backdrop that is very, very supportive, especially now that you're into outright negative rates in many currencies. Gold, at least, is a zero rate. So if you're trying to avoid negative rates, gold is an obvious option, one that can't default, can't be arbitrarily devalued, carries no credit risk. And so people who think in portfolio terms think, wait, I under-own gold. I need to rebalance and get more gold into my portfolio to help address this fundamental situation. So the fundamental backdrop from gold is very supportive at the moment.
Okay, some of the other fundamentals we've got, let's take a look at where we are with other aspects of the markets. We've got the non-farm payroll data coming up on Friday. Is that a big issue for gold? Does that tend to steer gold, or does it not really have much of an impact?
It is a big figure. Many people trade it. It creates a lot of market volatility across financial assets and commodities. Now, that said, I sometimes scratch my head why. Labor market data tends to be lagging data rather than leading data, number one. And also, this particular figure, non-farm payrolls in the U.S., is subject to pretty large revisions. And those revisions, in fact, are big enough to make you question the statistical significance of any given monthly print. I mean, don't get me wrong, the trend can be very important, but a given month's data is almost neither here nor there once you wait for the revisions to come through. But it is what it is. The market will trade it. If the figure comes in strong, they'll assume the Fed is definitely prepared to raise interest rates again at the next meeting. Gold may take a small hit, a small setback if that happens.
Anything else that you think that could form a stumbling block for the bulls in gold?
Well, there's noise. There's just noise in any price action. There's noise in any data series. I think it's pretty clear now that the evidence, the background evidence, is that the U.S. economy is slowing down, the global economy is continuing to slow down, and that, yes, more central bank stimulus may well be on the way, as well as fiscal stimulus before year end. Yes, fine, maybe the Fed gets away with another rate hike. But I think when you look through the noise, I think gold will only be subject to relatively minor near-term setbacks, but that this uptrend will continue.
Yeah, okay. Well, let's take a look at the uptrend again. We got this chart, and this chart goes back to June 2014, so we've got a fairly long period here. We are now at one-year highs. We're at highs not seen since January last year. Now, this uptrend, we're quite close to top end of it. Technically, our technical analyst here, Josh Mahoney, was talking about a resistance point here at 1307, just above where we are, and again at 1345. How do you see this chart developing? What's the price action in your mind looking like at the moment?
Well, this upward channel suggests that we've got a well-established uptrend now in the price of gold. If we in fact break through the upward line of that upward channel, that actually suggests an acceleration of the uptrend that will take us through that just linear level resistance that you've got outlined on the chart there. And we'll march right through it. And in fact, if the uptrend does accelerate out of that channel to the upside, then in fact, it suggests that we could see 1,500 in dollar terms, $1,500 per ounce by the end of May. Now that sounds aggressive, but if you've already established an uptrend and you've got a breakout of that channel to the upside, you could well see that sort of magnitude of bullish move in gold on a fairly short time horizon. And again, the fundamentals are supportive of this.
Here's the 1500 level you can see there at the top of the chart there, which is another thing you've asked me to draw on here. So give us some sort of perspective as to in fact, we haven't been there since that big decline that we saw back on the 15th of April 2013.
That's exactly right. That's exactly right. So that big decline was obviously very decisive, and I'm not suggesting that breaking out from this uptrend channel will reverse that decline, but we'll get back to sort of where that decline began to consolidate a few years back.
You mentioned gold in dollar terms. This is what the chart represents here.
Right.
How is the gold chart looking in other currencies?
Well, that's a good question because it's looking even more bullish. Keep in mind that if you look at gold in other currencies or in a basket of all major currencies, the downtrend in the gold price ended over a year ago. So in fact, gold has been moving back into an uptrend versus currencies generally for a long time, and that uptrend has now accelerated with the dollar itself coming off. Now, we actually prefer to look at gold that way because we think of gold as an international currency, and fine, the dollar may be the most important sort of paper currency out there, but really gold being as international as it is, we think it's a truly more honest, thorough picture of what gold is really telling us if you think internationally and look at a basket. That is an even more bullish picture, and we believe that international investors who think in local currency terms as well as dollar terms, they will be getting even more bullish as a result.
Okay, all right, John, thanks for the update. It's good to talk to you again. That's John Butler from GoldMoney, and taking a look at the chart technically again, we're looking at that 1307 to 1345, and then as John was saying, we're going to break out that channel. 1500 looks like it could well be the next stop-off point.